Over the past 2 decades as a financial planner, I've seen hundreds of avoidable retirement mistakes. Some that cost thousands and some that have even ruined retirement for people. And so in this video, I'll go through 5 of the biggest that you must avoid. The first big mistake that a lot of people make is retiring at the wrong time of year. And we recently did a video on that. If you haven't seen that, check that out. But the time of year you retire can make a big difference. And by default, most people end up retiring on their birth date or right around their birth date. I turn 60, 65, whatever the age is, most people retire around their birthday. Now, the reasoning for that is because they might hit a magic number at work or years of experience or whatever, but it may not be the best time to retire. When you retire, are you going to receive a severance package, a bonus, some sort of larger payout that's taxable to you? Well, you may not want to retire at the end of the year because you have a full year of income. Now you got this additional lump sum that's going to be taxable, driving up your tax bill. Probably look to retire earlier in the year. For a lot of you, you get bonuses, but it's based on what you did last quarter and you get paid it 3 months later. Well, you might want to wait until that payment comes through. So there's a lot of nuances and everyone's situation is very different. So when's the best time of year for you to retire? You need to have that answer going into retirement. If you're not already subscribed to the channel, make sure to hit the subscribe button. We release 2 brand new videos every week around tax, retirement, and estate planning for Canadians. The second big mistake we see retirees make is taking advice from their long-term advisor. And you may have had a long-term relationship with a financial advisor at the bank or a financial institution, wherever. Now, it's worked well maybe for you to this point, but the conversation you need to have with them is, what is your experience with retirement planning, with decumulation of assets, with drawdown? What I hear again and again from all of you that watch this video is that my advisor doesn't know how to do a drawdown strategy. They don't know how to create the laddered income, an RSP meltdown, create tax strategy. They just give me 2 thumbs up and say I'm going to be okay in retirement. And that is not a retirement plan. And so for many of you, retirement means it's also maybe time to retire your old planner and move to someone that specializes in retirement planning. Retirement planning is very different than the accumulation phase. So decumulation in retirement is very different than accumulation pre-retirement. Now, a lot of advisors that do the accumulation can do the retirement. Don't get me wrong, it's not 2 totally separate things. We do accumulation, we do decumulation in our office. But most advisors don't have the handle on decumulation, how it works, the tax strategy, or they don't do it day in, day out. So start asking and having these conversations with your current advisor to see, is this going to be the best person to walk me through retirement? And if not, you need to start looking for someone that can be a match for you, that can really create a great plan and nourish that relationship and really help you, A, put the most money back in your pocket, B, pay the least amount of tax, but also build a plan that lines up with your retirement goals. You've worked 30, 40, maybe 50 years to get to this point of retirement. You want it to go well. You want to enjoy retirement. Make sure you have an advisor that can do the job for you. The third big mistake we see retirees make is move to DIY investing. And I know a lot of you have moved to DIY and it's going great, and that's great. I think it's a great option for a lot of you. One thing when you hit retirement that you really need to consider is you're going to start spending down your money. You're going to accumulate your money. You're going to pull money out of your accounts. And I always say, as an investor, it's a lot easier to buy really great companies, but it's really hard to sell them. And for the majority of you, and I mean 99% of you, in retirement, you will have to sell and spend your money. For the very small percentage of you, maybe you can live off dividends and you built up millions of dollars and you live off the interest. But even in that case scenario, you need to decumulate out of registered account to non-registered accounts. There's still money movement. There's withholding tax. You're going to have to sell something. There's still movement. There's still a lot of things going on. When you enter retirement and start drawing down accounts, part of that is, okay, the plan shows this, so I need to pull out $30,000 from my RIF account this year. Well, what am I selling in my RIF account? How am I structuring my RIF account so that if the markets or when the markets do drop eventually, am I prepared for that? Is my cash flow ready to go? Like, there's more to the DIY investing as you hit retirement. Again, when you're still working and accumulating, it's like, yeah, I'm going to buy more of this great stock and this great company. It's a lot easier. Transitioning into retirement and decumulation for a DIY investor, there's a lot more to it. So just make sure you have a good handle on that, because a lot of you have moved to DIY to save fees, but all those fees that you're saving, I see it again and again, you're giving it to CRA in the form of taxes, or you're giving it up in market's down 30% and I didn't prepare and I need to put food on the table, so I have to sell whatever I have regardless of what the market's doing. Not saying DIY is wrong in retirement, it's a great solution for many of you, but just be aware that there's a lot of nuances to it that you need to understand to have success with your retirement plan and the decumulation of your accounts through your retirement. The fourth big regret we see and we hear all the time is people retiring either too late or too soon. And I tell everyone, you want to have a great plan so that you know you can retire so that you don't have to retire twice, right? Most people don't want to retire, realize, oh, I got to go back to work and then retire a second time. We want to retire once and just move nicely into retirement. But we also don't want to work longer than we have to. For most of us, some of you love your job, you want to keep doing it. I talk to you once in a while, but for the majority of you watching this video, when you can retire, you want to retire. And we do a lot of retirement plans for you, the viewers, that we say, look, you could have retired a couple of years ago, but you just didn't know it. You'd never had a plan in place. And that's why it's important to get a plan a few years leading up to retirement, 3 to 5 years, if not 5 to 10 years. Get a plan leading up to retirement so that you know any changes you need to make to your plan, and also maybe you can retire earlier than you think. The fifth and final regret we hear all the time is avoiding tax planning. And for most of you, you're employees, meaning that you go to work, you get a paycheck, they take off the right amount of tax. If you want to do any type of tax planning historically, you've made a contribution to an RSP, or you've made a donation. Those are your 2 tax planning strategies. Fortunately, for every single Canadian, you have a lot more tax planning strategies available to you when you hit retirement. When you hit retirement, you'll have many income sources. Everyone's different, but RSP, TFSA, non-registered account, maybe a pension, CPP, old age security. If you're married to common law, times 2. You could have over 10 income sources. Some you can start now, some you can defer. Some are taxable and some are not. So how you put that puzzle piece together makes a big difference on how much tax you pay. Typically, paying less tax means more money is coming back into your pocket. And so the advantages of tax planning for every single Canadian is there. Whether you want to use it or not is up to you. And let me tell you, the majority of you watching this video are not taking advantage of the tax planning tools and opportunities that are available to you. And for most of you, it's because you don't have a proper plan. And I know I keep going back to that, but that's what our office does day in and day out. So we see it day in and day out. We see the impact of having a proper plan. Again, I always say our typical client is saving 6 figures, so hundreds of thousands of dollars in their retirement from proper tax planning, knowing where and when and how to do things. Yes, we're gonna have to pay tax, but there's opportunity and strategy to pay less tax. Are you taking advantage of that? For the majority of you watching this video, you are not. It's time to start taking advantage of that. Sit down with your financial planner. If they're unable or unwilling, or you don't have a financial planner, reach out to our office, parallelwealth.com/planning. We provide retirement planning services for Canadians. If you need help with that, you can learn more on our website. All of our information, pricing, a sample plan is on there. Everything's on there. And if you need to contact us, all that information's there as well. So we'd be happy to help you. But the key here is you need to make sure you understand the opportunities for you in retirement. They're very different than pre-retirement. Take advantage of them. Let's all put more money back in our pocket, less to CRA, and enjoy retirement.